to today's video. Let's dive into how central banks influence Forex markets and how you can use this knowledge to trade smarter with space markets. Central banks are institutions that manage a country's currency and monetary policy. They control inflation, stabilize the economy, and influence exchange rates through interest rates, quantitative easing, and more. Central bank decisions impact currency prices in powerful ways. Changes in interest rates, for example, can strengthen or weaken a currency, while quantitative easing can flood the market with money, causing depreciation. When a central bank raises interest rates, investors flock to that currency for better returns. This strengthens the currency. Conversely, lower rates tend to weaken it, as investors seek better yields elsewhere. In times of economic trouble, central banks may implement quantitative easing, buying assets to inject money into the economy. This increases the money supply and often weakens the currency. Central banks also use forward guidance to signal their intentions about future monetary policy. Traders react to these signals by buying or selling currencies based on expectations, moving the market even before any official action. Let's look at recent central bank moves. The Fed has raised interest rates multiple times to curb inflation, strengthening the USD. Meanwhile, the ECB's slower rate hikes have kept the euro weaker against the dollar. So, how do you use this knowledge to your advantage? First, track upcoming central bank meetings and decisions. Use an economic calendar, and always be ready for volatility after announcements. Focus on currency pairs that are sensitive to central bank policies, like euro to US dollar or US dollar to Japanese yen. These pairs are often the most volatile after central bank meetings and give traders the best opportunities. By understanding how central banks influence the Forex market, you can stay ahead of the game. Keep track of upcoming events, use the right tools, and trade smarter with space markets. Thanks for watching.